Hey there everyone, it's Joe from Ainslie's Gold Silver Standard Insights, brought to you by goldsilverstandard.com and ainslieBullion.com.au. Today's topic is massive meta layoff. Is the labour market finally starting to crack? Now that's posted on the Ainslie website. I'll put a link below for you to follow along. Of course, we have Chris Tipper here to break down the morning's news. And joining Chris today is regular contributor and Ainslie team member, Branko Radunovic. So gentlemen, over to you.
Thanks, Joe. Well, what an extraordinary series of events have unfolded in the markets over the past 24 hours. We'll hopefully do a deeper post-mortem with Josh next week once the dust settles, and Branko did a deep dive yesterday on the rapidly evolving situation as it was at the time that you can watch on our YouTube channel. But FTX, the second largest crypto exchange, has effectively gone bust out of nowhere, sending crypto markets into panic. In the broader technology markets, we also saw Meta, who's Facebook's parent company, fire 13% of their staff last night, on the back of previously Elon Musk letting go of half of the Twitter workforce after he fully acquired the company and took it private over the last couple of weeks. So these are just a few examples of quite shocking and broad-based retrenchments that are happening across the tech sector that are likely a sign of similar moves that are coming our way in broader industries. So this could be the start of something much bigger. And then, of course, we have the very important US CPI numbers with that inflation data coming out tonight. So we've got volatility sky high and the potential for more fireworks to come if those inflation numbers persist as high as they have been. So there's heaps going on, and we welcome Branko today to help us make sense of how all of these fast-moving components fit together. So thanks for joining us today.
Thanks for having me back on. It's a crazy time at the moment.
It certainly is. So I want to actually dive in first. There's a lot there, but I want to dive in first on what we were talking about in the news piece today that you put together, specifically around Meta. So that was one that I don't think, let's say the market probably saw it coming in some ways because they've performed really quite poorly in the lead up to this. But Meta had pivoted and they were really focusing on that idea of wanting to be focused around the metaverse. It hasn't worked to plan so far, at least. So can you give us a little bit of background about that really quite shocking move to fire a big chunk of the workforce? And particularly what happened after that, because the price actually started to pump a little bit after they laid off those or announced that they were going to lay off those people. So can you give us a bit more background around Meta?
Yeah, I find that quite interesting as kind of a takeaway here, in that you would think like, oh, massive job layoff, like the stock price should go down. But the earnings of these companies were kind of, a massive, obviously, shock to the system and how low they were. So investors were looking at how these corporations are going to cut costs to kind of boost those profit and earnings numbers back up. So the market was quite receptive, and we saw a 3% initial pump during pre-trading, and we closed the day 5% higher, just because investors want to see layoffs. They kind of want to see these bad news come in, because it shows that the corporate tech companies are being a bit more probably responsible with their hirings and cutting some dead weight. So
the negative is it's one of those negative is a positive scenarios, because people say, well, at least you're dealing with the issue.
Yep.
Yeah. Okay. And because it wasn't the only, I thought it was really fascinating in the news piece today. There's a sort of a table there that really showed a lot of companies, and I couldn't believe some of these numbers. They're massive.
I mean, it is crazy to just list it up, like some of these numbers. I mean, you got Twitter 50%. Which, not surprised because of the Musk situation. Robinhood at 23, Snapchat at 20,
and
Coinbase
this is the percent of their whole workforce they just got rid of.
Correct, which is unbelievable. Lyft 13, Shopify 10, and FTX, as we might discuss a little bit later, a lot more than that. So
could be 100% at the moment.
Could be probably 100%. So it's across the sector, we're seeing this massive just firing, and the stock market is responding kind of positively, which is interesting, but quite obviously for the broader economy, very concerning for the everyday person who might be working for these organizations.
Of course. And do you think that that's the end for these companies? So is that, we get rid of a big number up front and then they're good to go? Or does it stabilize after that? Or is this a start of something bigger for those companies?
I think it's definitely going to, because I think at the very least, we're going to see a hiring freeze, which Facebook, Amazon, and Apple have all announced up until Q1. I think what we're going to see is like a reassessment phase. So they're going to look at the demand Amazon hasn't really fired that many people yet. So I think that a company like Amazon is actually going to have a layoff period. But Facebook and Apple are going to just have, those freezes. So,
and Amazon's an interesting one. Sorry to interrupt you on that, but I think some of that might have happened before because they've hired a lot of robots to replace people, and they're probably you probably don't fire your robots.
Well, that's the other thing, is that you've also got not only the job firings, but a lot of this, these are more demand induced firings. So it doesn't even include like being replaced by a robot. So there's almost more to come in that sense, right? Because a lot of these companies, probably overhired from the demand from COVID because everyone was stuck inside on their phones going through Facebook. So that doesn't even include the potential of people that were kind of pre-lockdown working there that get their jobs replaced by robots. So there could be more to come from an automation.
So there could, right. And this is a very tech-centered sort of focus that we've had so far. But is this contagious out to the broader economy and to broader industries? Because obviously tech is leading the way here. And like you said, there could be a lot of reasons for that tie back to a specific period of time with COVID. So it kind of makes sense if they overhired. But is that the same in other industries? Do we expect to see, are they just leading what we're going to see more broadly?
I think it's more the latter, though I do think they have a unique kind of, because of their overhiring and the extreme demand they saw during that lockdown period, they are kind of overly exposed. So it's going to be like the most extreme. However, I do think the tech industry is going to be leading like they often do, like we saw during the stimulus, in 2021 when all the stimulus money came out. The tech industry, like Tesla, the NASDAQ was absolutely flying and kind of leading that charge, right? I think we're going to see that in the inverse now, where we're going to see these tech companies leading the charge for everyone who are going to, see massive layoffs, particularly with the economy. And as we know, inflation numbers which come out tonight, if they continue to get higher, could be an upward pressure on your kind of mum and dad pop stores. And they might be forced, those small businesses might be forced as well to start firing workers.
Sure. And we talked about this last week on Insights a little bit, this idea that really the employment and labour market lags. So we haven't really seen yet that tick up. And that was something that was concerning me, because when I was looking at the sort of the stuff that I do and looking at the charts and analysing, I was saying, well, for the low to be in the share market, you kind of need the unemployment rate to be a bit higher than where it is, particularly when the Fed is raising rates and we're in that really tightening phase. And it just wasn't happening because we had month after month of really quite good data where you had more jobs being created, unemployment rate staying or dropping lower. I mean, it did just tick up in that NFP we just saw. But is this sort of how you're viewing it? Is it, the labour market, can we view it through that non-farm payroll and unemployment data, or is there, how do you view that?
I think that the non-farm payroll unemployment data is pretty unreliable in this current environment because they're backward looking, and more than ever before, the situation is kind of rapidly changing, right? Every month rates are coming in, inflation print is higher. You got the second biggest crypto exchange blowing up, which we'll talk about shortly, which will add to it, but it's just so quick. And, what happened 6 months ago now is almost kind of irrelevant. And these job losses that we're seeing in the tech industry haven't been priced in these unemployment figures. So these job losses are more of a signal of what other companies are probably going to continue doing.
Yep.
And therefore, I think you can't really rely on these unemployment and non-farm payroll figures to give you an accurate prediction of what is to come.
So you would almost go as far as to say that what we're seeing in the tech industry could be a bit of a leading indicator.
Absolutely. Leading indicator for the future of the employment market, at least in the medium term. And we kind of saw it with earnings as well, where their earnings came out and the reaction to that, and we'll probably see similar earnings in other companies as well.
Sure. And now we will turn to that one that's certainly been capturing our attention in the office.
Yeah.
And I know you did a deep dive on this last night, and fascinating that you can go right into something and a few hours later everything has changed yet again. So can you just give us a really quick rundown on on the big picture, because a lot of people who are listening to this may not really be following the crypto markets, but this is fairly significant and possibly significant beyond crypto as well. So can you just give us a bit of an overview of what you talked about in that video, but also just what's happened since?
Absolutely. So last night I just talked about where we were. So FTX, the second largest crypto exchange behind Binance, basically they've gone bust. And the reason for that is a lot of shady business practices, and they were potentially playing with consumer deposits as well. Lots of high risk trading, and so they've gone bust. Binance, the leading crypto exchange, said they were going to buy them out. And that's where we were last night. And I noted last night, interestingly, that in the initial tweet that the CEO of Binance said, he said it was a non-binding agreement. So that was an important point I noted. And as of this morning, it came out that he backed out of the deal. So we're in this situation where a lot of consumers can't get their funds out of FTX, and they were going to get bailed out by Binance, which would have probably allowed them to have gotten their funds back. But now Binance has pulled out. So you have a large sector, the crypto community, that are unable to get their funds out. Imagine if, ANZ goes bust, you can't get your funds out of ANZ. That's what we're kind of seeing the equivalent of in the crypto community at the moment.
And FTX, just to add my little bit of flavor to that, from what I've been looking at, is very much not just retail as well. There's a lot of institutional connections there. So that becomes problematic, because that can actually bleed into the NASDAQ and into your mainstream stock market stocks, because some of them actually had fairly large exposure. I know there were rumors that Tom Brady, the US superstar, he and his wife had a significant investment in there, and I was saying he's going to need to keep playing for quite a while to recover those funds. But so it is something that probably needs to be, the people need to be paying attention on, even if they aren't crypto focused specifically.
Yep. I mean, so you have just if you're in FTX, the impact of that, but then also you have, if you're in Bitcoin, Bitcoin has broken 16,000 today. It's going down. FTT, their FTX token, is honestly probably going to go to zero at this point, for being realistic, because if they get liquidated, that's the likely situation. And then, like you said, traditional markets are going to be impacted. A lot of people who have invested in FTX and blue chip, or previously blue chip crypto companies like Alameda Research could go bust as well, who's a sister company of FTX. And then anyone who has money that Alameda owes them could go bust as well. We could see this kind of contagion Lehman Brothers-like event in the crypto space. And then any traditional companies that have dealings with them could also go bust. So it's really going to impact a lot of different areas, and not even in just crypto. I think it's an important thing to focus on, even in traditional markets as well.
And we saw through previous similar things that have happened, this contagion can actually take a little while to unwind and work its way through the markets. So it's not necessarily over yet. And I did see just before we came out on air to do this, that there was even talk about another potential player coming in to solve the situation. From the Tron chain. So we've got lots happening, and it's really evolving very rapidly. So no doubt by the time this video is out, it will have changed again. But that's good to be on top of. But there's just so much happening here that we need to be paying attention to it. It can be a bit mind-blowing on days like today, but that's where we are. So thank you for going through all that. There's a lot there and I'd really encourage people to have a look at that news article. It really blew my mind, the size of some of these workforce layoffs. And they're all names that they're not sort of obscure companies. They're big companies, and they're massive percentages of their workforce that they're laying off at the moment. So this could be a sign that the much anticipated recession, we've been arguing we're probably already in it, but that we start to see the data reflecting that. So really useful to have that analysis today. All right, well, thanks for that, Branko.
Good. Awesome. Thanks for having me on.
We'll catch up again next week.
See ya.
Thank you, Branko, for joining us. And Chris, I'll see you on the next one. And for the audience, I want you to head over to the Discord channel. That's discord.gg/gold to continue the conversation. Chris and Branko will be there for the next 1 or 2 hours after the upload of this video. So head over there, ask your questions, get a response, and let us know your feedback. We really want to hear from you. I always want you to subscribe to the YouTube channel. That's youtube.com/Ainslie Bullion for the wide range of informational videos we put out 5 days a week, including specials and more. And while you're on the internet, head over to goldsilverstandard.com because that's bringing gold and silver into the digital world. As we say here at the end, balance your wealth in an unbalanced world. Take care, and we'll see you next time.